Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back to the show. Well, as promised, we're going to talk about the real estate sector now. Godrej Properties has had a strong quarter 2, both in terms of the income statement, operations and pre-sales. But what's the state of the sector as a whole? To get a sense of that, Pirojsha Godrej, the MD and CEO of Godrej Properties, joins us now. Pirojsha, it's a pleasure to speak to you. We've been speaking after a while and, we're celebrating our 18th birthday as well. So thanks for joining us. I first wanted to ask you about the NCR market, because this is a market where you've been able to break the jinx. There's been a prolonged bad spell for all the other companies there, but you somehow managed to sell your projects well. What's happening in that market now?
Well, good morning, Sonia. Let me first start by just congratulating you, your entire team, and all your viewers. It's been an amazing journey for CNBC over the past 18 years, and all of us here are big fans and viewers, so happy 18th anniversary. And thanks for the question on the NCR market. I think that's a correct assessment that the market itself has been going through pretty challenging times. And in many ways, I think the crux of that really is that a lot of developers in the good years in the NCR markets really overextended themselves, sold huge amounts of inventory, but were then lacking on the delivery front. And I think what that did was really tainted the sector in the minds of customers. But I must say it also created an opportunity for a company like us where I think with the Godrej brand, which stands for trust and commitment, I think people understand that delivery will happen, and I think we've been able to back that up with successful project deliveries in NCR. And I think that missing trust factor is really what we've been able to bring, and obviously we have to combine that with getting projects in the right locations, trying to create outstanding designs, handling our customers the right way. But certainly we've been very happy with our experience in NCR. First, we were primarily in the Gurgaon market and did very well there. We've recently, in the last year, entered Noida, and our project there, which was launched almost exactly a year ago, has been actually our best ever selling project by volumes. So I think we're quite happy and looking to build on that track record in NCR.
So what's on the design board for NCR over the next, say, 6 to 8 months? And in terms of, volumes, how much are you looking to sell?
Well, Sonia, I think the big step we took recently in NCR was the entry into the Noida market. We've just over the last couple of weeks launched our second project in Noida. And that's doing very well so far, so I think very encouraged to see that. So the strategy in NCR is essentially to make sure that we're present in the various micro markets in NCR. So we today have a presence primarily in Gurgaon, now in Noida. We look to have projects in Delhi itself. We hope to in Q4 launch our first project in Sona. We're looking at on the business development side at adding projects in other micro markets in NCR. So really the company strategy both in NCR and in the top 4 markets in India, which are Mumbai, NCR, Bangalore and Pune, is to try and make sure that we're in as many of the micro markets in each of those cities as possible, which gives us the best opportunity to tap as many customers available in those micro markets.
Okay. Hi, Pirojsha. It would have been such a pleasure to actually call you up for a drink rather than to celebrate our birthday, speaking numbers with you. You have to tell us some numbers. It was an excellent second quarter number, 50% rise in revenues. Is this a maintainable level?
Well, I'm going to take you up on that drink offer the next time you invite me on. But yes, I think, we certainly think the sales numbers have been very encouraging in the first half of the financial year. Both the first and second quarters were at record levels. But we do think that these numbers are sustainable in the second half and beyond. And I think obviously the goal of the company is to grow quite rapidly. And to do that, we'll need to keep finding ways to expand our current sales performance. And if you look at both the launch pipeline that we have for the rest of the year, where we have about 5 new project launches planned, which is much higher than in the first half, as well as 5 or 6 secondary phases of existing projects. So I think there's every reason to expect we'll be able to back up the strong first half with a strong second half. But really, Lata, I think, the opportunity we see is one that is much bigger than what we're currently able to demonstrate. Because I think, first of all, obviously, we're in a sector that is a massive sector. While it's going through currently a challenging time, we expect the next couple of decades to be very, very strong for the real estate sector. And added on that, there's a big opportunity to consolidate market share. Because despite being the #1 publicly listed developer by sales over the last couple of years, we estimate our market share is probably only about 1%. So I think there's a huge opportunity to participate in the overall growth story of the real estate sector, but particularly with the introduction of RERA and other steps, there's a huge opportunity to also benefit from consolidation that's underway in the sector.
You know, that's the received wisdom, that when RERA comes, a lot of small guys will not be able to manage this kind of regulatory rigor, and they will come out and sell out to the bigger boys. But is anything on the anvil? I mean, Godrej Consumer keeps on buying stuff. So are you also buying up any properties or companies?
So Lata, I think we actually are seeing a lot of opportunities where entire companies are for sale in the sector. Frankly, we've not yet seen anything that's very attractive. And unlike, say, in FMCG, you're not really getting anything in terms of brands and other things, because really it's our own brand that we would utilize. So what we've typically seen is that it makes more sense to look at project level acquisitions. And in our case, that usually is through the joint venture model versus an outright purchase. Certainly, we see an opportunity to build on that momentum. And the market is definitely consolidating. I think anecdotally, we see in our own portfolio that 4 or 5 years ago, most of our joint venture projects were with landowners who were corporates that had surplus land, or high net worth individuals, or other types of landowners, whereas now almost all our new projects are with other developers.
Okay. All right, Pirojsha, we could have gone on, but we'll discuss the rest over the drink. Thank you very much for joining us today with all those details. Actually, it's good going for the markets, and it has maintained that lead of 0.5% that it notched up about half an hour back. So still going strong, and anybody who would have bought at today's early morning trades would perhaps have been making money. So the bulls are actually in the money. The advanced declines as well, holding up between 3.5 and 4:1.
Yes, and you know, some stocks are looking really strong. Just pull out the intraday chart of Titan. That stock has moved to high point. And I think Biocon is having a fresh breakout. Just see the chart of that stock. It's been that kind of stock. That's Titan, but really the one that's having a fresh breakout right now is Biocon. So a lot of these stocks are moving up. But double celebrations at the CNBC TV18 stable. Of course, as we discussed, it's our 18th birthday, and we're also celebrating the mutual fund day. So we have S. Naren now joining us, CIO and ED, of course, at ICICI Prudential Mutual Fund. Naren, good morning. Thanks a lot for joining us. Of course, you have been a channel's friend for last many years. So thanks a lot for that. Your thoughts on what's happened of late? I think last time when you were here, you told us, you warned us that the time is right to maybe shift to hybrid funds and not pure equity funds.
Yeah, first let me wish CNBC and its viewers a very happy 18th anniversary. I've been in equities for the last 28 years, and I think clearly there is a pre-CNBC era and post-CNBC era, and I remember the period in 90s when things used to be very different. So I must compliment CNBC for changing the entire complexion of the stock market. So from a market point of view, we have believed that while the market is not in end cycle, the valuations and sentiment indicators were no longer very attractive. And from that point of view, we would want more volatility, and luckily there has been about a volatility in the recent past. And what was very interesting to me is that the 6-month return in Nifty is just 4%. And if you asked most people in the market, they would tell you that the 6-month return should be double-digit. So while the feeling is that of a bull market, the last 6 months large cap index return is not in commensurate with the mood of the market.
Good morning, Naren, and thank you very much for that very generous praise. It's a daily responsibility, and we hope we live up to it every minute. But just to come back to the point you were raising, that, we touched 10,000, I think, on July 26th. And if you look at it from that point, clearly not too much of gains have been notched up. But at this moment, where would you enter then? Is it a churn? Is it, say, a movement from NBFCs to public sector banks or something like that that you recommend?
See, if I look at it from a scheme point of view, we have always been in favor of categories like balanced advantage fund for quite some time now. From a capitalization point of view, we have always believed in large caps, but as you know, the last 1.5 years, while we have believed in large caps over mid cap and small cap, continuously mid and small caps have been outperforming large caps. So that's the reality, and I would still tend to believe that when the cycle for earnings improve, I think large caps have a much bigger way to go. And part of the reason for mid caps doing well is that while the local investors have been very, very exuberant, the foreign investors have hardly been exuberant in 2017. If you look at flows in 2017, they are very, very small compared to what we used to see in 2010 to 13. So we still believe in large caps, and we still think that if people have to invest for the long term, you either choose a category like balanced advantage fund or a theme like large caps. At this point of time, this has been a consistent view, and I would say while the volatility part has been working recently, I don't think the large cap versus mid cap and small cap has been.
Okay. Naren, hi, this is Sonia here. I wanted your views on debt as well, because I was just reading one of your recent interviews where you said that you're quite worried about how investors are only looking at equities and as though there's no other asset class to invest into. Would that mean that you would recommend investing in debt funds as well in 2018?
See, clearly what worries me at this point of time is that having been in equities for 28 years, I have seen downs in the market. 80% of mutual fund investors have not seen a 10% correction in equities. So they consequently think that equities is an asset class will either give you plus 10 or plus 7 or plus 4. Because they have not seen 2011 or 2008 or earlier bear markets. So my thesis has been that investors should not invest in debt for the sake of debt returns. I don't think there is a big return expected from debt funds if you invest today. But there is a necessity to invest in debt because it is certainly a much more capital protection product compared to equity. And the reason for investing in debt funds is not return but capital protection, because you're not likely to see minus 10 or minus 15 in debt. So what happens is at the most you will get lower returns but not negative returns over medium periods of time. So what we've been trying to tell people, you either invest in equity and debt funds together individually, or you invest in a category like balanced advantage fund, because debt doesn't appear bubblish. In fact, no one is interested in debt funds at this point of time, whereas in equity, the kind of flows, as most of you know, I don't think anyone would have expected that the local mutual fund industry will get 20,000 crores per month, which is the current run rate, which shows that local investors are really exuberant in equities and lukewarm towards debt.
Okay, fair point. Getting back to equities, Naren, last year your big call was telecom. Your contra buyer, and we've seen a huge rally in Bharti Airtel. Are you still playing that theme?
See, we are big believers in that theme for the next 3 years because, in my opinion, most people in this generation don't care whether they hold a purse. They are very happy as long as they have a mobile phone with them. So consequently, I believe that the mobile phone telecom as a sector is a very good sector to own. Having said that, is the sector as cheap as it was 1 year back? Is there fear in the sector as it was 1 year back? The answer is no, because the few consolidated players people are pretty confident about. And so it's no longer a big contrarian play. Is it a structural play for the next 3 to 5 years? I seem to think so.
Okay. Unfortunately, out of time, Naren, give me a monosyllabic answer. What is the next contrarian bet?
See, I think, people tend to believe that we can create a big boom only out of consumption. My view is that I don't know whether this is a 2018 call, but I think that over the next 3 years, exports has to be a good theme, because you can't keep buying a mobile phones without an export story also. Okay. So my bet is exports led by technology and healthcare, but I'm not too sure whether it's a 1-year call or a 3-year call.
We'll take both with both hands. Thank you very much, Esther Rain, for joining us on what's a very special day for us. You are a very special guest.